Hello everyone, this is Gracie here. In this video, we will be discussing problems on borrowing cost. So here in illustration 3, Hari Limited obtained a loan for rupees 70 lakh on 1st April 2015 from a nationalized bank to be utilized as under construction of a factory shed rupees 25 lakh, purchase of a machinery 20 lakh, working capital 15 lakh, advance for purchase of truck 10 lakh. Then, in March 2016, construction of a factory shed was completed and machinery which was ready for its intended use installed. Delivery of truck was received in the next financial year. Total interest 9,10,000 charged by the bank for the financial year ending 31st March 2016. How do you treat the total interest charged on loan? So they've asked how are we going to treat the total interest which is charged on loan. So all these assets or the loan which is taken for 70 lakh includes 25 lakh plus 20 lakh plus 15 lakh plus 10 lakh. When you add everything together, you get the loan amount of 70 lakh. So advance. Next, they have also given you the interest what you're paying for the total interest you're paying for the loan which you have taken 70 lakh from the nationalized bank is 9 lakh 10,000. So here the 70 lakh loan is taken for a specific reason. That is, it is a specific loan which is taken to acquire a qualifying asset. Yes. So this is how the loan amount is being installed for construction of factory overhead, purchase of machinery. So construction of factory shed, nothing an asset. Purchase of machinery is also an asset. Working capital, the expense which is meant to run all these activities is also it is also an asset. The expenses which is spent, which is to be capitalized. Then advance is given for the purchase of truck is also a asset to be capitalized. So they're telling the construction is completed in March 2016 and the other activities or delivery of truck to be received in the next financial year and the interest is given. So first you need to know, as the percentage of interest is not given here, you're supposed to know what is the percentage of the interest. So here treatment for the total interest of 9 lakh 10 is as follows. Before getting into the table, first we will calculate what is the percentage of interest. So how to calculate is effective rate of interest is equal to interest amount divided by the total loan amount. So what is the interest as per the question is 9 lakh 10,000. And what is the total loan amount, which is 70 lakh. So interest divided by total loan amount. So total interest is 9 lakh 10,000 divided by 70 lakh into 100 will give you 13%. So 13% is the interest rate which is charged on the loan what you have taken, which is for 70 lakh. So how are you going to show it? Show it in a table is treatment of the for the total interest of rupees 9 lakh 10,000 is as follows. Purpose of loan, construction of factory overhead, and what is the loan amount is 25,000. Purchase of machinery, loan amount is 20,000. Next, working capital 15,000. Next, advance to suppliers for the purchase of truck is nothing but 10,000. So the total loan amount comes up to 70 lakh. So what is the percentage which is incurred? As per the calculation is 13%. So 25,000 into 13% will give you 3,25,000. 20,000 into 13% will give you 2,60,000. 15 lakh into 13% will give you 1,95,000. 10 lakh into 13% will give you 1,30,000. So this is the borrowing cost or the interest. Borrowing cost is nothing but the expense which is spent on the loan. You take so much loan, you need to pay interest. Interest is nothing but your expenditure what you incur. But this expenditure is paid for developing of a qualifying asset, or for the purpose of loan is here, which is meant for developing a qualifying asset. This interest can be added to your asset account. Okay, will be added to your asset, or it is also called as it will be capitalized. So how much are you going to capitalize is the total of this, total of your borrowing cost, or which is also called as interest, 3,25,000 plus 2,60,000 plus 1,95,000 plus 1,30,000, which will give you 9,10,000 is your borrowing cost which you will be capitalizing. So this is the in treatment of your total interest which is charged on your loan account. So we will get into the next problem. So next problem is illustration 4. Gamma Limited borrowed an amount of rupees 15 lakh, so 1 crore 50 lakh on 1st April 2015 for construction of a plant. Yes, the loan is borrowed for a specific reason, that is for a development or construction of a plant, which is nothing but a qualifying asset. So at what interest? At 11% per annum. The plant is expected to be completed in 4 years. The weighted average cost of the capital is 13% per annum. Due to surplus funds out of 1 lakh out of 1 crore 50 lakh, an income of 3 lakh 50,000 was earned and transferred to income statement. Calculate the borrowing cost to be capitalized. So what is the total borrowing made is 1 crore 50 lakh and the interest rate for it is 11%. So the work is completed in 4 years. They have given the weighted average cost of 13%. They have given specific loan rate also, rate of interest is also given as 11%, and average cost of capital as explained in a previous video. When can this capitalization be effective is under that point when a general loan is taken and that loan is used for developing a and that loan amount is used for developing a qualifying asset, then weighted average cost of capital percentage will be used to calculate to find out what is the exact borrowing cost what you're going to capitalize from that general borrowings. So in this problem they've given weighted average cost, so we will check whether we are supposed to use this percentage or the specific loan interest rate percentage. So then they also stated, due to surplus funds out of rupees 1 crore 50 lakh, an income of rupees 3 lakh 50 was earned and transferred to income statement, and they have asked us to calculate the borrowing cost which is to be capitalized. So let us get into the calculation. So this is your calculation. So what is your actual interest is calculation of borrowing cost to be capitalized. So what is your actual interest which is to be capitalized is actual interest cost is 1 crore 50 lakh into 11%. So here this full amount is taken for a construction of a plant, that means for a specific purpose. There is no general loan which is taken under this problem. If you read the question clearly, it states Gamma Limited borrowed an amount of rupees 1 crore 50 lakh for what? For construction of a plant. Then there is no other loan taken for a general purpose. It is only one loan which is taken for a specific purpose or for developing a qualifying asset. So we will use the specific loan percentage which is 11%. We will not use 13% because there is no general loan taken here. So in this calculation, we have found out the interest by taking the specific loan interest rate. So 1 crore 50 lakh into 11% will give you 16 lakh 50,000. Now this is your actual interest which is to be capitalized. In this you have a surplus of funds which, or you have the income. So surplus funds which is remaining in the loan amount is nothing but an income. So you will minus the income out of it which is given in the problem, which is stated due to surplus funds out of 1 crore 50 lakh, an income of 3 lakh 50 hours was earned and it is transferred to income statement. So we will minus it less income from surplus funds which is 3 lakh 50,000. So 16 lakh 50,000 minus 3 lakh 50,000 will give you the exact borrowing cost which is to be capitalized, which is 13 lakh, which is 13 lakh. So what this note states is capitalization based on average cost of capital of 13% is not proper in this problem, because all the loan amount which is taken, or the loan amount which is taken is for a specific purpose. So let us get into the next calculation or next problem. So in this problem, illustration 5, Raja Limited had the following borrowings during a year in respect of capital expansion. So he's taken a borrowing for capital expansion. So if there are plant P, Q and R. Cost of asset is 10 lakh, 12 lakh 50,000, 17 lakh 50,000. So this is the cost of asset for plant P, Q and R. So for this, there is no specific borrowings. For developing this or for buying for buying plant B, there is no specific borrowings. For buying plant Q, they have taken a bank loan of 6,50,000 at 10% interest. Okay. For plant R, to buy plant R, which is 17,50,000, they have taken a loan 9% debentures. They've taken borrowings borrowing of 9% debenture of rupees 12,50,000 were issued. So they've issued debentures here for issued debentures and collected of or acquired capital of rupees 12,50,000. In addition to the above specific borrowings, the company had obtained term loans from two banks, 10 lakh at 10% from Canara Bank and 11 lakh at 11.5% from SBI to meet its capital expansion requirements. What is the amount of borrowing cost to be capitalized in each of the above plans? So here Plant P, which is costing 10 lakh but no borrowings is made. In Plant Q, which is costing 12 lakh 50,000, they have taken loan only for 6 lakh 50,000. So what is the remaining amount which is to be satisfied? So that loan will be considered with your other loans, term loans, what you have taken. But plant R, which is 17 lakh 50,000, you have only taken or you have only your only source of funds what you have obtained from this debenture is 12 lakh 50,000. So there is a still remaining amount to accomplish or to buy this plant R or to purchase plant R. So in order to meet this remaining or to in order to acquire the remaining loan amount, what the company or Raja Limited has decided is the company had obtained term loans from two banks. So from two banks, that is 10 lakh at 10% from Canara Bank. This 10 lakh will be used to acquire plant B. Then 11 lakh at 11.5% from SBI. So this 11 lakh will be used for satisfying or to purchase to adjust purchasing plant Q and plant R. So how is this satisfied is we will look into the calculation. So what they have asked us to borrow to find out is to meet what is the amount of borrowing cost to be capitalized in each of the above plans. So we'll get into the calculation so you will understand how is this calculation being followed. This is the solution part. Computation of actual borrowing cost incurred during the year. So here particulars, sources of funds what you have got bank loan which you have taken 6,50,000 which is there in the question. 6,50,000 bank loan which is taken stated here. Bank loan of rupees 6,50,000 for plant Q is taken. So bank loan 6,50,000. What is the interest rate for that loan? Is bank loan of 6,50,000 at 10%. So 6,50,000 is the loan amount, rate of interest is 10%. Next you have taken debentures loan which is 9% debentures of rupees 12,50,000. So what is the loan amount what you have taken? 12,50,000. What is the rate of interest? 9%. So debentures 9% debentures 12,50,000, rate of interest is 9%. Next you have taken other general loans. So what is the specific loan here? It is bank loan and 9% debentures. As in the problem it states, for acquiring plant Q, for acquiring plant B, there is no specific loan which is taken. But for plant Q, a specific loan is taken. That a specific loan is the loan which is specifically taken for development of an asset, to acquire or to produce or to construct an asset. So bank loan is nothing but a specific loan which is shown that it for developing or for acquiring plant Q. So plant Q bank loan and 9% debentures of rupees 12,50,000 are considered as specific loan. So then you have two loans which is obtained. So these are general loans which is taken. So because your specific loan what you have taken are not satisfied, so they have taken a general loan which is generally taken without any specific reason, so which is 10 lakh from Canara Bank. So your term loan from Canara Bank is 10 lakh. At what is the percentage which is stated in the problem? At 10% from Canara Bank. Then 11 lakh at 11.5% from SBI. So 11 lakh at 11.5%. So now you will calculate the interest. So from bank loan 6,50,000 into 10% will give you 1,12,500. Then 9% debentures 12,50,000 into 9% will give you 65,000. Then term loan from Canara Bank 10 lakh into 10% will give you 1 lakh. Then term loan from SBI 11 lakh into 11.50 will give you 1,26,500. So what is the total loan amount what you have taken is 40 lakh loan you have taken, and this is the interest rate. And what is the interest or the borrowing cost or the expense what you have spent for the loan which you have taken is, when you total up all 1,12,500 plus 65,000 plus 1 lakh plus 1,26,500, you will be getting 4,04,000. So this is the interest or this is the borrowing cost. So out of this you can capitalize only specific borrowing cost. So the specific borrowing cost we have, is a loan which is taken for the development of that particular asset. So what is that specific loan which you have taken? Bank loan. How much is the interest or the loan amount? 6,50,000 plus 12,50,000. So specific borrowings included in above is 6,50,000 and plus 12,50,000. When you add, you will get the loan amount which is 19,000. So interest on this is 1,12,500 plus 65,000, which will give you 1,77,500. So this is the loan or the amount to be capitalized, which is the specific borrowing, and this is the interest to be capitalized. But what is stated in the question is that loan which you have taken for plant Q and R, which is 6,50,000, and for plant R, which is 12,50,000, will not fully satisfy to acquire plant Q and plant R. In order to satisfy for purchasing or for acquiring these assets, an extra loan which is taken, but it is not for a specific purpose. It is a general loan which is taken. So for plant B, they have taken a general loan which is 10 lakh at 10% from Canara Bank. So when a general loan is taken, as I've decided in previous video, you will be using weighted average cost method or the formula. So let us calculate using your weighted average cost of capital calculation. So what is the formula is calculation of weighted average capitalization for general borrowings. So the general borrowings what you have taken is used for developing a qualifying asset. So out of the general borrowings, you need to know what is the percentage which can be used for capitalizing or for adding that expenses to your asset to be capitalized. So using the formula, weighted average capitalization cost is equal to total interest less interest on specific borrowings divided by total borrowings less specific borrowings into 100. So your total interest is 4,04,000. Then your specific borrowing interest is 1,77,500. So which is 4,04,000 minus your specific borrowings, which is interest on specific borrowings is 1,77,500 divided by total borrowings less specific borrowings. So what is your total borrowings is for 40 lakh. How much is your specific borrowing, which is 19 lakh? So 40 lakh minus 19 lakh into 100, which will give you your numerator 2 lakh to 26,500 and the denominator 21 lakh into 100, which will give you the weighted average capitalization cost rate, which is 10.79 percentage. So this is the percentage at which you can capitalize your general borrowing cost. So now capitalization of borrowing cost. So to acquire P, you have taken fully a general loan is taken. General loan is taken from Canara Bank. The amount is 10 lakh as stated in the question. So in addition to the above specific borrowings, the company has obtained a term loan from two banks. So 10 lakh at 10%. So what is the asset value here for plant B, which is 10 lakh. So this 10 lakh is used to satisfy or to purchase plant B. So plant B general borrowings 10 lakh. What is the interest on general borrowings what you have taken? 10.79. So 10 lakh into 10.79 will give you an interest of 1,07,900. So what is the cost of the asset? So loan amount plus interest amount will give you 11,07,900. Then for Q you have specific as well as general borrowing. So what is the specific loan what you have taken? 6,50,000 at 10%. And in order, as the 6,50,000 is not enough to satisfy or to acquire this asset, 11 lakh loan is taken. Out of this 11 lakh, 6 lakh is used for acquiring plant Q. So there is specific borrowing as well as general borrowing involved in it. So which shows here specific borrowing for acquiring plant Q is the loan which is taken from bank, which is 6,50,000 at 10% interest. So which will give you 65,000. So 6,50,000 plus 65,000 will give you 7,15,000. The general borrowing is 6 lakh. 6 lakh, that is how are you getting 6 lakh is the 11 lakh loan what you have taken will be substituted or will be divided to acquire plant Q and plant R. So in this plant Q, 6 lakh 50 is the borrowings what you have taken for a specific purpose. Then the remaining amount is how much? 6 lakh. So 11 lakh minus minus 6, I'm sorry, 12,50,000 minus 6,50,000 will give you the remaining amount what you are supposed to consider from the general loan amount is 6 lakh. So general is 6 lakh. So as this is a general loan, you will be taking, or the interest what is to be charged will be your weighted average capitalization rate. So 6 lakh into 10.79% will give you 64,700. So the cost of the asset is 6 lakh 64,700. Next, for acquiring plant R, the loan what you have taken is only 12,50,000. So you have the remaining amount to be adjusted here. So the general loan what you have taken 11 lakh, out of this 11 lakh, 6 lakh is used to satisfy plant Q. The remaining 6 lakh, the remaining amount will be 5 lakh, which can be used to satisfy or to acquire your plant R. So 12 lakh 50 is specific borrowing, and the 5 lakh will be your general borrowing. So how did you get 5 lakh is 17 lakh 50,000 minus 12 lakh 50,000. The remaining amount which is to be used to buy this asset is how much? 17 lakh 50,000 minus 12 lakh 50,000 will give you 5 lakh. So how much is remaining in this 11 lakh? As this 11 lakh, out of this 11 lakh, 6 lakh you have used to acquire plant Q, where you have used 6 lakh to acquire the plant Q. So the remaining amount of which is to be used to acquire plant R is 5 lakh. So your 11 lakh loan is adjusted here. So specific borrowing is the debenture amount what you have collected. So 2,50,000 for the specific borrowing, interest rate is given in the problem stating as 9%. So 12,50,000 into 9% will give you 1,12,500. So loan amount plus your interest charge will give you 13,62,500. Next is your general borrowings. So out of your 11 lakh, 6 lakh is used here. So the remaining, how much are you going to use to set off this? 5 lakh. So general borrowings is 5 lakh. Well, for general borrowings, what is the interest rate? What is the interest method you are using? Weighted average capitalization rate. So what is the weighted average capitalization rate? Which is 10.79. So 10.79 percentage. So 5 lakh into 10.79 will give you 53,900. So 5 lakh plus 53,900 will give you 5,53,900. So the total of it here, the calculation, when you add up your cost of asset, when you add up your total interest, you will be getting 4 lakh 4,000. So 4 lakh 4,000 is the answer. But when you look into the calculation, 6 lakh into the weighted average cost rate 10.79, 6 lakh into 10.79, you will be getting 64,740. but here they have considered 64,700. Again, when you look into the general borrowings, 5 lakh into 10.79 percentage, you will be getting 53,950. So when you add up 64,740 plus 53,950, the total interest will increase of 40 plus 50 90. So it will be 4,04,090 rupees. So here we are not taking the extra amount here. We have taken 4,04,000 because the previous sheet what is shown here, the actual interest amount or the borrowing cost will be 4,04,000. So there is a condition stated here, as we discussed in the borrowing cost theory. It states that the borrowing interest amount or the amount to be capitalized, the borrowing cost or the interest amount which is to be capitalized shouldn't be more or shouldn't exceed the borrowing cost. So here it is 4,04,000, but when we use weighted average cost method and calculate the interest, we find a variation here where 40 rupees is more under 64,700, where we get 64,740, and under 53,900 we get 53,950. So where we get 90 rupees excess. So as per the note, the amount of borrowing cost capitalized should not exceed the actual interest cost. So your actual interest cost is how much? 4,04,000. But the interest amount, what are we getting from when we capitalize the general borrowing funds is we get 90 rupees excess. In order to that adjust that excess, we are deducting 40 from 64,700 and 53,900. 40 rupees and 64,700 and 53 and 90 and 50 rupees and 53,900 in order to meet the condition or in order to satisfy the condition. So now when we minus 90 from 4,04,000, we 4,04,090, we will be getting the actual or equal interest amount which is to be capitalized. So as the condition states, the borrowing cost which is to be capitalized should not exceed the actual interest amount. So what is the actual interest amount as per the calculation? You will be getting 4,04,000. So as it is 4,04,000, it can be equal to 4,04,000, the amount to be capitalized. That is, this is the amount which is to be capitalized, the interest amount to be capitalized. This can be equal to the actual interest amount, that is 4,04,000. As there is 90 rupees excess, we are adjusting it in order to meet the conditions. So this is how you will be treating your borrowing cost under the point which we discussed in your theory, theory statement. Theory statement, borrowing cost eligible for capitalization, where we discussed here the same point, the borrowing cost which has to be capitalized shouldn't exceed the actual interest amount. So where this problem will clearly as clearly explained how to treat this statement. So thank you everyone. The next problems will be discussed in your upcoming videos.